And we're live. Hello and welcome to a special episode of Game Theory. I'm Maddie Allen here with special guest Dibcatcher. Welcome.
Hey, how's it going? Thanks for having me.
And well, you're quite a special guest. You're on the list of some of the biggest brains in the crypto space that I've been working my way through trying to interview on Tuesdays. We had Johnny Chaos and Axis Alive the past couple weeks, and I know that all the work that you've been doing is also going to give the viewers a unique perspective.
Yeah, well, thanks for having me on. I'm always impressed with how much you stream. I feel like by now, we're almost 4 years into this. You've probably logged, thousands and thousands of hours. Do you have the exact number of how many hours you've live streamed?
Well, it turns out I realized that today is the third birthday of the channel. And so I
Hey,
just looked at all the stats. It's been like a little bit over 400 videos going live every week now for just under 3 years. But I guess the most impressive thing is how much people view this channel, where we have conferences and special guests and really awesome people such as yourself to learn from. There's been 36 million minutes watched.
oh my
And
gosh.
yeah. And when we had Axis on the other day, there was over 7,000 views, and that's almost up there where the Bitcoiners are, who have 100K subs. So it's clear that there's something about Hex. There's something about this community's engagement and how people have locked themselves into a smart contract and then stick around socially that I find particularly interesting.
Yeah, I think that thirst for knowledge is really unique to, we're very active. Whereas I think in other things, even though Hex itself is kind of a more passive thing, maybe not some of the newer stuff, but like in these other communities, maybe it's just like more passive, or it's kind of like, they saw the Super Bowl ad and then they, decided to buy, but they're not really like, I guess, part of it. So
yeah, I think like people can sell Bitcoin no matter how much they believe in it. They can always sell it the next day if something gets in their head. But with Hex, people have committed to have a long-term relationship with crypto, and that leads us to having long-term friendships with each other.
Yeah, it's pretty amazing.
I think some of the work that you've been doing is particularly amazing, and so I'm really excited to interview you today about a bunch of different concepts. I'm not sure exactly where to start. Like, can you tell me more about the origin of your name, Dibcatcher and Tanto Nominai?
I think Dipcatcher, it just kind of just something that just came to my mind once. I think like it had to have been right around the time that I first started making Hex YouTube videos, which I think was like in April of 2020. I was just getting on and I would do these like Zoom calls with some friends and just, teach them about crypto. And at the time, I had been kind of coming up with just different Bitcoin trading strategies because I used to, try to do the whole Bitcoin trading thing. And like I would the premise that I was trying to kind of follow was like I would like try to catch a dip, like just with a limit order and then like kind of almost scalping in a way. So that's, I think, kind of been the genesis of Dipcatcher. And I think I just bought a domain name way back then, and it just I just decided to kind of roll with it. So nothing too crazy with that. Tanto Nominai is from it's a Latin phrase that is on the tombstone of a famous author, Niccolo Machiavelli, that I actually saw in Florence. I went to Florence a couple years ago, and went to all the different sites, and we see the tomb in one of the cathedrals. That's the gravestone of this author, and he was like a political leader, and he was he was famous for a book called The Prince, but famous for other things as well. And
Yeah.
on his tombstone, all it says was "Tanto nomini nolum par Elohim," and what that translates to is "Such a great name cannot be described in a eulogy." And so, like, it's just so Tanto Nomini, just like a direct translation, I guess. It just means a great name. Like Tanto is like such a great name. It's like just so that's where Tanto Nomini comes from. It's
That's
kind of
really
I
cool.
recognize that it's probably not very good branding because it's hard to pronounce. You don't really know what it means. Tanto, I do think is a good name. I actually really like the name Tanto. Nomini is a little harder for people to enunciate, but it's I do like it and I do think it's unique.
That's a really cool backstory. I was in Florence over the summer, and I've read the Prince, so that clicks for me. And I think a lot of the people tuning in here and in our community are pretty deep thinkers, and so I think a lot of people can appreciate the backstory there. Very cool.
Yeah.
Now, when it comes to your first name, Dipcatcher, or your kind of not self-chosen nickname, I was really impressed with a stream I caught the other day that you did, and you seem to have found a particularly incredible algorithm for being able to understand when in crypto we're at a top or at a bottom. And can you give me a little bit of background and technical kind of insight into why your dip catcher algorithm, like why it's particularly good?
Yeah. So the dip catcher algorithm, it's a trading view script that I had made, and it kind of brings together a couple different commonly used TA indicators. So it's kind of like my own kind of blend of Bollinger Bands, average true range, and then some principles of like support and resistance. So it kind of stems out of those types of analysis techniques.
For
That I
those of
kind of
us who are a little rusty, can you remind me what a Bollinger Band is? Is that
So
a
just thinking about
moving
like an
average?
easy way to think about it is it's the moving average and then plus or minus two standard deviations. So like when price is moving a lot, high variance means high standard deviation. So like those bands widen up, and then when price is moving flat, there's very low variance, so small. And so you can kind of get some ideas around the just the general trend and various like where the prices were kind of topping out, and kind of you can
Like the
get
strength of the trend, kind of?
yeah, you can it's useful for a lot of things. Like it kind of packs a lot of data based on the relationship between those values. And so it's kind of a combination of that and then average true range. So like what I like with that algorithm in particular, it doesn't look at what normal indicators look at. Usually everything looks at the close, so that's the price as the day ticks over,
Uh-huh.
which is a fine sample, but it doesn't really tell you much. It's basically a random selection of that day. Like price could be anything in that moment, but
Mm-hmm.
what the really important information I think is in the boundaries. So it's all based on. It doesn't look at like what the current price is or like the daily close. It looks at the boundaries of like it takes the high and the low and it calculates based on that. And so it kind of is like a Bollinger Band of the range that the price traded in. And so, kind of breaking it out like that, you can kind of lean into some of those points in their relationship and how they change together. And it's really effective in it and what it's designed for. It helps you signal when it's a good time to buy along with a DCA strategy. So if you're dollar cost averaging, when that thing just indicates that it's a fine time to buy, you can just kind of buy at any price in that range, and it's a totally good way to approach long-term DCAing because it's really good at helping you not be like chasing pumps. It's like you're always kind of letting it come to you. You're not really in a rush, and it kind of even helps kind of prevent catching the falling knife too, because like it kind of has this like auto readjust thing where like it starts to reassess, and so it usually like it may signal buy and then price may go up a little bit and then it may signal buy again. And if price breaks down, it like takes a break from signaling buy and kind of recalibrates to the new range. And so it just has a really, it's just a good guideline for knowing when to dollar cost average in. It doesn't tell you when to sell because that's a really personal decision. And it's a very tough thing to make.
But you made an observation on your show the other day about a certain, it seemed like it was a creative solution to say that you could invert what you're already working with.
Yeah,
Tell
you
us
can
about that.
press the inverse, and you can use it like a sell indicator. But so but there's definitely, and it definitely called, like, if you were to have done it on the, it wasn't publicly available until after the bull run, but like, had you actually inverted it and then applied it to that on the weekly chart, because the longer time frame, the like less sensitive the signal is. So like on the weekly chart, those usually round out like the generational lows, like the 5 lowest weeks of a Bitcoin cycle, for instance. It really does a good job rounding that out. But if you were to do that on the hex chart, it basically rounded out the top as like a cycle high. If you, or inverse, would be cycle low. So it can be used for that, but at least it was designed to be like a dollar cost averaging indicator. And it's very useful. Like I that chart is up for any chart I look at, any crypto or any other asset. I'm usually like looking at it through that lens, because it packs a lot of good information. The more you kind of dig into, just the relationships between the different ranges, it packs a lot of information in a very simple way.
And are you measuring the success of this based on how it's performed prospectively, or just like when people, I guess, are trying to develop algorithms, they do a lot of back testing, but then that doesn't really prove the, how true of a signal they've picked up on. Does that make sense?
Yeah, because it was back tested through, because TradingView, when you're publishing these, they have like these back testing tools. And so when I was building it, I was kind of back testing it, and then and applying it to what I would do is I would be like working on it, and I would apply it to different charts. So like things like Hex, things like Bitcoin, Ethereum, gold, coffee futures, like regular commodities, other currencies, just because like you don't want to be too biased around like any one type of market structure, especially when the history is limited. Like with Hex, at the time it was being built, it actually had very little price history. And so
Yeah.
but like Bitcoin had a little more, gold has way more, and like so different. It was kind of a cross between back testing, and then also just kind of some like basic logical testing as well. Like, and that's mainly around in classifying a buy zone, and like making it where like you're not just like, buying all the way down, like some kind of way to regulate like when to kind of, like pause and reassess. And so it was kind of a combination of back testing, but also, because like you said, even because something happened in the past, it has no impact on future activity. Maybe there are patterns you can pick up on, but that's not certain. It's entirely based on buying and selling in that moment. And so little bit of discretion, and a little bit of back testing, like more mathematical approach to designing it, I'd say.
Did you find that having the right data indicator, having the right algorithm to tell you when the best time could be to buy, to DCA, and that sort of thing, was that helpful for you in not buying a top in Hex or in Ethereum or in Bitcoin ever? Was it helpful for you in buying lower and then seeing a price appreciate?
Yeah, so it definitely helps in like the buying low aspect, because like,
I mean, like just irrespective of back testing, like, is this something that has helped like somebody in real life, or
yeah,
yourself, or
yeah,
anybody? Okay.
yeah, for sure. And yeah, I mean, myself, and like whenever a friend like messages me, someone I know from growing up or whatever, and they're like, "Hey, I heard about this coin. Like, should I buy it?" Like the first thing I'll just go to TradingView and pull up the chart and plot it on my on the algorithm, and I'll be like, like, okay, well, on a long time frame, it's in like an aggressive pump, but like on like the weekly time frame or the daily time frame, it is approaching this. So like if you really want to buy, you know, understand it can always go lower. If price goes to the levels there on the weekly, that's probably the best time, but you know, your choice. So like kind of equipping, just kind of framing it when people ask me about stuff against that as like a, you know, here's like at least like a guideline for, are you getting in at a good price, or are you going to have to like hope the trend continues, and then you have to be a lot more accurate in when you sell? Because like rounding out the bottom, it reduces how accurate you need to be in selling to get a profit. But if you're like chasing pumps, like you can certainly make money in a short amount of time, but you're the window in which you're profitable is just shorter. And so it's useful in that sense, I would say, of helping people know when like just their best odds of it are, and that these are like multi-cycle long-term games with like short-term action. So it's useful in that sense.
Do you know anybody, or have you yourself found it difficult to sell when you know it's a top, or when you suspect it's a top? Or what is that like for you?
I mean, it's definitely tough, because like knowing when the top is, it's a very like, it's very difficult, even though it's like an inverse of the bottom. It's just so hard, because especially when you have like recent history of, you know, things that look like tops, but then it just keeps on going. And so honestly, for the top signal, I think that especially more so now, I feel like after kind of seeing this whole, you know, like I saw the 2017 top, you know, cycle, I was kind of riding that. And then this more recent one, more so than on the chart, I think that just like there's like psychological things that go on that I think are more evident of a top circle. Like if there's a documentary crew coming to interview you about your paper gains you're showing on an app, that's probably a top signal. Or I don't know, I should have been wearing the shirt. Like I made a t-shirt with the hex price chart with like, and I think the price was like 37 cents. And like literally I get that in the mail, I take it out, and I was like, I got this like feeling in my stomach, like just seeing a t-shirt with the like celebrating the chart. Like things like that I think are more kind of like that, those weigh equally to, which you can't capture in just like a trading algorithm. Things like that I think are you know, potentially even more evident of like what the top is. But you know, but I mean, similar things apply to kind of rounding out bottoms, like with statistically as the tops. But like it's skewed, like during a, you know, a 3-year bull market, everything's skewed one way, but then during a 3-year bear market, everything's skewed the other way. And so, you know, but it is actually very good at like even like shorter term stuff too. Like some of the tops, like if you like invert it on short time frames, like if you're using it for like a short term trading thing, it can be an effective way of kind of rounding some of those out too, but just higher risk.
Well, I think this discussion is great because this is a big part of crypto, is not losing all your money on short-term plays and being able to catch tops and bottoms to some degree. So for me, and you and I have now been through 2 or 3 cycles, and so we've I think learned a lot ourselves. For me, man, I was so busy hosting the in-person HEX conference, I printed 555 t-shirts that had the price chart that went, you know, straight up. And I'm looking at the t-shirts and I'm not thinking it's the top at all, right? And
yeah.
And so it's cool that you had that awareness yourself. I think you know, thereafter it was easy for me. I think the indicator that I was looking at was when Coinbase went public. That was like a big indicator for me. And of course, when Richard called the top and like had predict, you know, in Bitcoin, that made sense to me. But I think the thing that threw me off with HEX compared to anything else, and I didn't realize this until we went back and looked, but it was like every altcoin ever pumped after the Bitcoin top in the past like 2 or 3 cycles. Like it's very rare to find a really big coin with a really big community, and HEX actually peaked before the Bitcoin top, and in the 2021 cycle. And so I think that that was particularly interesting. And kind of, if you didn't know that Hex was going to do this thing that hadn't been done before, which is peak before Bitcoin peaked, you might have been like me and been waiting until after Bitcoin peaked to see like Hex go up even more, like you know, like Ethereum and everything.
And maybe the reason for that is because the whole PulseChain, kind of that like from idea through sacrifice, that was actually a really big kind of shock on the Hex supply, where people were like buying up Hex to then invest, or to be able to participate in the PulseChain sacrifice. And then when all those Hex went in there, it was kind of like they were burnt because they're just sitting there liquid. They're just, and so it had that accelerated effect, which I think in the 2017 cycle, all the ICOs pumping was because and causing ETH to pump so high was because you had to buy the ETH to do the ICOs. And so and I think they came after because when the thing that's low risk goes on a run, everyone wishes they had got that return, and they want it now because they saw like a thing that they obviously, everyone knows about Bitcoin. I mean, more people than not know about Bitcoin. And so they missed out on that one. And so they want to lever up the risk so that they can get a similar reward in a shorter time. And so there's just a lot more appetite for that risk, where you want those gains that you might have missed out on. And then that pushes a lot of money into ETH, which was pushing a lot of money into the ICOs. And since the ICOs, it's kind of like a whip where maybe Bitcoin is the handle of the whip, and then Ethereum is kind of like the little thinner part, and then at the end are the egregious, the crazy shit coins. And it kind of the tail end gets the hardest whip up, but then kind of the instant retract, because it kind of follows, that energy just kind of follows along. And it's because people are just eager to take on more risk because they want that same reward. And there's kind of the inverse on a bear market where everything sells off. And I think we're seeing that right now for the past couple of months, where people are that bought, near the highs of the major low risk assets. They're now, pretty upset. They want to make it all back in one trade. And so they're just ready to lever up the risk and just take on, things. And so it's kind of it gets stupid at the top of the market with pet rock images selling for millions of dollars, and some of those ICOs, they were just
Ether rocks.
Yeah, Denta coin, a coin for dentists, just gets stupid at that tail end of a bull cycle, and then it gets kind of stupid at the tail end of a bear cycle. And then it's kind of that same phenomena, but in reverse of either trying to capture the gains that the big guys got, or trying to make up for your losses and just risk.
Well, I've got a story for later in the interview about making it all back in one trade on your coin in particular. But but I think this whole idea of what have we learned from previous dips and all-time highs and all-time lows, I think looking back, the biggest thing that stands out to me in terms of the Hex chart is that Richard had claimed before Hex launched and repeated many times 10,000x in 2.5 years, as it's possible. He didn't say it's guaranteed. The price dipped so low after Hex launched, nobody thought that was possible. And that's part of the psychology of the whipsaw that you're talking about, and the absurdity that markets go through at lows and highs, that that's really, you can't have the story play out how it did without extreme despair after Hex launched, and all these 6 or 7 70% dips, and all these rips up, God will, doubling things. But it was so Richard based 10,000x in 2.5 years off of what Ethereum had done, and just saying that it's possible. He said that it's possible in Hex, but then people had the opportunity to time lock their coins. So I think the reason why we didn't see Hex doing so well after the Bitcoin top is because everybody had time locked their coins to become unlocked at 2.5 years. And then people had figured out, not me, I wasn't thinking this far ahead, but people had figured out that they could front run the 2.5 year call just in case it came true. And so it actually took 1.7 years on day 656 to get the 10,000x from the all-time low. And that it's like everybody set a limit order. Again, me, not the smartest person who figured this out, but you know, people certainly were selling. I bought my DeLorean up when it was, you know, above 25 cents. And it's like, I think the reason it stopped going up also was that people realized that the 10,000x had already happened. And then you started to go into that period of unlocking coins of people front running the 2.5 year call. And so, but I mean, I don't think you could have had a stronger supply shock either without the sacrifice, which, how much did that take? A third or 2/3 of all user controlled liquid hex.
Yeah, it was a huge amount, and you know, people had to buy it and then like not sell it. So like Hex was going straight from liquidity pools into sacrifice, and so it's kind of like a buy and burn in that sense.
Yeah.
But then like I think that just every day that goes by, there's a stake ending that started between like week 3 and week 5. That like super sweet spot where like all-time low chart, you know, and a TShare rate that was around, I think, 10,000.
Yeah.
And so like, you know, 3 times as much TShares as after big payday. So they're earning at an elevated TShare rate, and they got their hex at an extraordinarily low price. And so like, you know, those users, I think, you know, the ones that had stakes that end in that window, they, you know, like they're fine selling, even at prices like now, it's still industry beating performance for the people that bought in that very low. And so like, that's like you know, I think that was part of like that topping of, you know, maybe we're like, normally it was hitting like a 60% dip and then rebounding. But like, even in that 60% dip, those really low buyers are still having massive performance. And so like, you know, maybe they saw on paper the value of their thing go, you know, go up another 10x, but like still they were shocked at the price when it was 5 cents. And so like, I think like the unwinding of a lot of those like really low cost basis hex holders, you know, that's probably why it's like it went so high, it kind of has to go low.
Yeah.
You know?
Absolutely.
And I always wonder, and maybe you'll have a take on this. Do you think that like the mental health of everyone would be better had Hex never gone those highs, if it had instead kind of just like slowly trended up to where it is right now? So like get rid of all, you know, the whole crazy run up and then big bear market. Like what if Hex had just kind of, you know, slowly made its way to where we are today? How do you think things would be?
Yeah, I think that would have been better for people's kind of emotional brains. I think that, yeah, it would have changed the outcome of people buying at the top, because it's not that people just don't have patience to hold on until there's more buying than selling. It's that people also don't have the patience to wait until there's less buying in order for them to buy. And so you have the reflexiveness of the price chart on people's psychology, and that makes a big difference. I think another thing that had a major impact on the psychology of people getting, and how, I guess, how their mental health has been since then, is like, I wonder if you had never had PulseChain and everybody was still a Hex maxi.
Yeah,
I mean, never had Hedron, and if all we had was your solution to high gas fees instead of PulseChain. Do you want to comment for people what your solution was and what you think that world would have looked like?
Yeah, I mean, it's so, you know, who knows? It's one of those like, if my, you know, aunt had balls, some type of situation. which I don't know, that may not even apply anymore. But it's always hard to tell because like something else would have occurred, But I think that like the PulseChain, I think was I never really like bought into the idea that PulseChain was designed as a solution for end state gas fees. I from the start I knew that it was just like like an obvious like big money growth opportunity for the ecosystem, because at the time the things that were being like really successful outside of Hex were things that were built on like Avalanche. Avalanche was having a lot of success. Maybe that was primarily driven by like Three Arrows Capital, and then like Solana, which was being driven by FTX. But like on paper there was hundreds of millions of dollars in these DeFi markets on these alt layer ones. And so I think that just like the awareness of an alt layer one as a big money opportunity, I think that was like the main purpose of PulseChain, because like if the purpose was to actually solve the end stake gas fees, like it wouldn't have even had to have been mine. Like an RH stake pooling protocol layered on top of native Hex, where like the go to hex.com, when you stake on there, it just like by default bundles you in with everyone staking that day. Even that could go a long way. Even if it wasn't meant to be liquid staking like what ours does, that like things like that would have been like clear cut instant solutions, that make like with Base, the stake that just ended yesterday, there were about 1,000 users in that single stake. And so like on a per user basis, that's a 99.9% gas fee reduction. And all users didn't pay anything for ending the stake. And so like things like that are like, direct, simple solutions to that as a problem. Whereas like with PulseChain being, 12 what is it, like 12% faster in terms of blocks, which doesn't actually impact anything. Like with, it can impact the throughput at any one time, but there's nothing else that changes how gas works on the network. The fee savings are only based on low activity and low PLS price. And so with like successful PLS, and increased adoption, the alt layer one as a gas fee solution for that use case, it is kind of diminishes. And it's even further amplified by now having the value split across both chains, when, the fees are cheaper, but now the value is also cheaper as well. And so it like increases the amount of stakes that are infeasible to end. Like or another solution is to, like if the Hex price is very high and it's much higher than the gas, then, less stakes are infeasible to end. So there's kind of like a cutoff line of what stakes make sense to end, and kind of like diluting the demand, and then just like horizontal, like incremental scaling of the throughput, that it's less of a permanent gas solution. Like we're experiencing low gas fees right now, even on ETH, the cost to end the base, which, it was only like $20 some, I think. And that's just because it's a bear market and there's very low activity on chain. And so I think that, had just like a stake pooling solution been, kind of, the first step and only step towards that problem, there probably would be, more concentration of value around Hex on Ethereum. But there also, wouldn't be the potential future upside opportunities of either PulseChain or things on PulseChain, even entirely unrelated to Hex. And so like, it's all, I kind of view it as like as a community, it's like we're risking kind of like this, like, the Hex on Ethereum, like it's almost like all these things are kind of not self-inflicted, because I don't want to suggest it's like a negative thing, but like things that we chose to do on our own, alongside Richard to kind of branch out in this other way. So it's kind of like we're risking some of that kind of concentration of value, and then for the chance that there could potentially be some greater value or other opportunities related. And so it's kind of just the trade-off in that sense, and something that'll get mark to market over the course of decades. And some people are going to have very high gains, and some people are going to have losses as a result. And it's kind of always going to keep things are always going to be shaken up, which I think is actually a really good thing.
Let's come back to the Maximus DAO tokenized hex stake conversation after maybe we can wrap up the dip catching part of the interview, because you recently said that now is a really good time, according to the dip catcher algorithm, to buy maybe Pulse or Hex or PulseX or all three. So can you talk about that? And then I guess before I ask you to comment on that, maybe I can explain like one macro thing I'm trying to wrap my head around, which is, and then because you understand your algorithm better, you can weigh that into your own weights. So like, I played the game of crypto in 2017, and I wasn't experienced enough to know that the CME futures launching a Bitcoin product that I don't know, did some crazy amount of volume starting off. I recently realized that like that also happened there was a different futures thing that launched in 2021 as well, which was also a top. But the day that the Chicago Mercantile Exchange launched their Bitcoin futures contracts in 2017 was the day of the top. And I had bought all the way up to 20,000. And then it broke my heart to have to buy all the way back down, to 3,800 or whatever. And so I vowed to learn from that and to never think of a futures event as a good thing because it's paper Bitcoin. And same thing with the 2021 top of like Coinbase IPOing for $100 billion valuation. That marked the day, the top on the day as well, I believe, because all of the massive buying all went into this thing that wasn't actually settled in crypto. And so it was yesterday that there was this big news. Ethereum, they're going to launch their futures contracts for the first time ever. And so I don't have that much ETH, but I was selling my ETH after it had gone up 5 or 10% in the past week, thinking to myself like, oh shit, I don't want to repeat the same mistake that I made last time. Whenever there's all these paper cryptos being added to the market, that's a bad thing. And so before that, I had been thinking we're at the bottom, everything's going up. And now I'm thinking, wait a second, most alts are going to pump after Bitcoin and after Ethereum. We know Hex and PulseChain were different in the previous cycle in terms of topping before Bitcoin and Ethereum. But I'm wondering what your take is this a sign of this is the top and this cycle gets skipped and it's going to suck? Or is there some other way to look at it?
Yeah, I mean, I think sorry, my camera just keeps shutting off. One, it's impossible to predict. It truly comes down to what the people with the Bitcoin or the people with the Ether do and what the people with the dollars do.
Yeah.
But I think that it's like when something that was plainly obvious that happened in the past. And so if everyone just looks at that and is like, oh, then this is going to happen because it, look what happened last week, then sometimes that causes it to not be the case. And so if everyone was having the same thoughts you were about there being a sell the news type of event around the ETH futures thing, because look at the Coinbase IPO, look at the CMC products marking the top of Bitcoin back then, everyone's like, oh, obviously that's happening. And so they're like, all right, I'm going to sell today before you sell. And then the other guy's like, okay, I'm going to sell the day before you. And so like, could potentially like that sell the news. Cause this has been brewing for a while, right? We've been waiting on this news for a while. And so like it may be like the downside that's already been experienced that may have just been pricing in that same phenomena you're describing. And I think that part of like what has reinforced those things in the past was that when when the CMC is building up the collateral base for, even if it's going to be paper Bitcoin, presumably there's some Bitcoin there. It's like, they're not just going to go and market buy on Coinbase. It's being like the mechanism that transfers that Bitcoin into their possession in that market. It's usually done through these like institutions or like hedge funds or like money management vehicles that have been acquiring it, years in advance, or anyone who had that inventory. And so they're the ones, so like the buy pressure that caused it to go up, while those people were building those inventories to deliver to CME, not CMC, Chicago Mercantile Exchange. While they're building up their inventory to deliver, all the buying had already happened. And then now, so like things like that, I think can cause that like effect of, as soon as the thing happens, it's like sell the news, because all the buying that was going to happen already did happen. And like similar thing with Coinbase, maybe, where like when they're going public, they're selling their company, and presumably Coinbase holds a ton of assets, and so a ton of crypto assets. So in a way, they're selling crypto assets that they had accumulated and held, in the years prior. So like that's a big instance of selling. Like the act of them going public. And since a lot of people had seen how the Michael Saylor's company had traded kind of like an index of Bitcoin, because like a large portion of the balance sheet was in Bitcoin, because people had seen that had risen with Bitcoin, people viewed buying Coinbase stock as a way to get exposure to crypto. Kind of how people buying the whatever his company's called.
MicroStrategy.
Yeah, MicroStrategy. So kind of a similar phenomena there, but in that case, it's like Coinbase is selling and people are buying at inflated prices, and like, they're not buying the coins, they're buying the stock. So it's not, ending up on, buying to push up the prices. So like, I think that like, so when prices are going up, I think those things factor in. It is different, but like if you assume that these things are years in the works, like maybe this had started in the like maybe years ago when the Ethereum price was like, $100. And so like, well, it's not the $5,000 high now being at about 1,700, whatever it's at, that's still up quite a lot. And so like, there of course can be, further, downside, but in this case, they like a lot of other compounding sell pressure has probably already been absorbed. Whereas like if with like the Coinbase ICO and the CME future, those were like the initial kind of like sell down, and then that caused other sell pressure. It's like backwards now, where like there's now been 2 years of sell pressure unrelated to that instance. And maybe this is just perhaps like the last little bit, instead of like being the snowflake that kicked off the snowball. It's just kind of like some of the last bit of snow that the snowball kind of picks up.
Yeah. It's really interesting to go back and analyze these things. What was it to analyze the narratives, and then to have, in your case, the algorithm, the maths behind you? What were you seeing in the dip catcher algorithm that suggested to you that there might have been a bottom recently in PulseChain?
So, with PulseChain, there's one, it's not on TradingView that effectively, but so usually I'm looking at the PulseChain charts on DEX Screener, but even though that like the you can't directly see it on PulseChain. I'm pulling up the chart right now so I can cite the numbers here more accurately. But on PulseChain, it just had signs that appear like what, like past ETH bottoms or past Bitcoin bottoms had. And so, where it's, as it breaks down and finds a bottom and then it's like oscillating in like the bottom, things like that kind of, tip you off. And sometimes like even zooming in on shorter time frames, because like on the daily and weekly time frame, there's not enough data on the charts that are available on TradingView, so you can't even really see it with the algorithm itself. But like times where it's down at the lows of a range, and like how it reacts to that like bottom range is kind of like what to look at, like relative to like the moving average, and then relative to like I guess the width of those bands. So like when I'm looking at the pulse chart on Dex Screener, I'm usually just like pulling up the because like I'm pulling up the Bollinger Bands and then like applying, like almost making like a bootleg version of the dip catcher bands themselves, and then looking there. But also like probably equally to that, I'm also trying to weigh in like the psychological feelings, feelings that I have in myself, trying to be really in tune with like when I look at the chart, what does it make me feel? Seeing how other people are feeling and acting. Seen a lot of people kind of, like not even in crypto, even just people in real life, like just out in the world, like you see this heightened tension. And so like if people not even in PulseChain are feeling tense, maybe people in, regular people out there, then maybe just the regular people here in PulseChain are extra tense. And so like things like that, just kind of that broad tension. I just kind of get this, get a feeling that like, things have been kind of rough for a while now, and you never know if it's the bottom until it's well in advance. But it seems due both like on the charts and in our hearts that probably some type of relief pump may be in the cards over the next weeks to months. Not to say a bear market's over, not to say it can't slosh flat for years or trend down for years, but like it feels now that there's that it's kind of seeing evidence of down of like trend reversal. So
yeah, you can't predict the corrupt the government official cracking down on crypto unfairly. You can't predict the billionaire who hears about it on his elevator ride and decides to go all in on HEX or PulseChain. But certainly the part it seems like that you're able to chart, that your technical analysis and further integrative understanding is capturing is more of the market sentiment and how that plays out in people's trading behavior, somewhat independent of those other variables.
Mm-hmm. Yeah.
Now, so yeah, shout out to you for being able to pick that out. Now, another thing I wanted to ask you about is you've been doing a pretty wild trading challenge. And can you describe that a little bit?
Yeah. So I just decided a while back to do a 1 million to 1 billion PLS trading challenge. And so it was just kind of on a whim, honestly.
That's 1,000x.
Yeah. And, just for fun. And so, because I was like, well, I started it, at least I bought the $100 or the 1 million pulse when it was at 0.001. So it was $100. And it was like, and
so you could have just held that and been down 60%.
Yeah. So, well, so like it's, it's up, it's up in pulse, but I mean, it is, I guess it is now up in dollar. It's up a lot in dollars, but it started at $100. And so I just did on my dipcatcher.eth, ENS name. And so I've just basically like just not even really trying hard to trade. It's certainly not like sitting there like trying to snipe things. It's like just kind of through my daily routine, just like as things come and go, and it's like I'll just decide to buy something here or there. The first thing that kicked it off was it was the it was actually I started with 1 million Pulse, and I had done some analysis that had tracked the no expectations address to some being related to addresses that have a rooted history in some now defunct yield farm that's identical to PulseX called Curry Swap. And so it was just this crazy story that was unfolding as I was kind of digging into these different addresses, and just the whole saga, if you remember a couple of weeks ago, about all that, a couple months ago now. Right. And Curry so swap. I just bought some Curry Swap, and then like just literally not even thinking about it, just was like, okay, well, like as almost as a joke, I bought it just to talk about it. And then that like doubled to like 2 million Pulse. And then I was like, okay, like, and then
Did you sell on a 2x?
So yeah, I sold it on a 2x, and then at that time that was when like the whole PDI extravaganza kind of started to kick off, and someone was talking about how people were minting free PDI, and they were wondering if it was some problem in the contract. And so I traced back. I found like those function calls, and then was able to like trace them back to their the contract on Ethereum. And on Ethereum, I could read all the code and see how it all worked. And so what I determined was that there was like, because something was just someone or something was just buying up a bunch of PDI and locking it up in liquidity pools, and they were not doing it at the same time as USDC, as like the PUSDC. There was a pretty big deviation in the USDC versus DAI copy tokens, which were worth down 0.00000 relative to the native one on Ethereum. The copies of stablecoins. So there was like a big spread in that USDC to DAI gap. And what I'd noticed was that like through that contract, you could, if you had native so PUSDC, if you built the front end for the contract that exists on Ethereum that's part of DAI's PEG stability module, you could go, and anytime the PDI price deviated from PUSDC, you could buy PUSDC, convert it at a 1-to-1 rate with PDI that's freshly minted from the contract, and then sell the PDI and literally just like be rotating. And so
good old case of arbitrage, huh?
Yeah, literally just a standard. There was like a between 10 and 30% spread for like maybe 2 hours. And then I ended up just closing the spread. So I kind of squeezed out everything that was there. And so, that turned like the 2 million into like 8 million, just like rotating that arbitrage spread. And so I was like, okay, like that's pretty cool. And then at the time, then I posted about how the reason why people were seeing minted PDI, it wasn't a bug. It was just like a part of the whole Maker DAO system for operating DAI that keeps the value pegged, where it within some within some boundary, it allows you to convert USDC to PDI at a 1-to-1 rate. So I just kind of picked that out, and then at the same time, the thing that was actually causing that spread was because the Atropa deployer and that whole Atropa system was accumulating a bunch of PDI. So it's almost like they were accumulating a bunch of PDI, but not USDC at the same rate. And so they were the ones that were kind of keeping this spread open, that I was able to just do that. And so someone pointed out that it was related to that Atropa coin and the deployer and all this stuff. And so I just looked at the Atropa deployer, and then whenever I see an address, when I want to see what's going on with them, I plug it into my pool party airdrop checker, because that gives me an idea of all the people that have participated in the Maximus DAO products. And I saw that the Atropa deployer is scheduled to get, pretty good airdrop when pool party launches. And so I was like, okay, that's cool. Like he's one of us. And so I just like blindly just decided to buy Atropa with some of the funds from that. And also I was doing the arbitrage spread through Pitius, that like the DEX aggregator. Because when I was trying to do it on PulseX, the quotes weren't right. My first trade actually lost money because of like the window wasn't open in the right way, and the quote that I got, it just took too long, and so like I switched over to Pitius, and it was very quick in getting the spread, and I was able to make the trades. So I broke up the gains from that whole arbitrage trade into Atropa, and also the Pitius sacrifice. So I just was like, all right, like you guys helped me do this, so put it into that, and then Atropa started running. And so the Atropa accounted for like a majority of the game. Now it's worth, it may be a little less. I'll have to recalculate how much like the paper value some of these things are now. But it's worth around 100 million Pulse right now. And so there's been like about, I don't know, like 90 million Pulse realized, and then the remainder is in other positions. Or no, about 60 million Pulse realized, and then the remaining is in other open positions.
Yeah. So for people who are just joining us, we are we're going through an accounting of how Dipcatcher turned $100 worth of Pulse into like 100x in a couple months. How long has it been?
Like first week of August. So 2 months actually, yeah.
Okay.
But a lot of it's just doing nothing. Most of the time
but we're also talking about how I took $100 worth of Pulse and bought a P-Dive before anybody was talking about it. But then I sold on a 2x. I checked back 3 days later, it had 32x. So I'm just like, oh, I can't win. But that's
so. Well, I mean, what's actually a pretty cool thing on Dex Screen is you can see the sell orders now, and you'll see with the Tropa, like, because I was just kind of worried, like I definitely know that feeling, like selling and then watching it continue to run, that sucks. And so I try to like DCA out of stuff, like kind of all or nothing. It's like you're leaving money on the table, and then so like with the Atropa, I've scaled down. Now I think I have about, I don't know, a sixth of my initial position. But whenever it was like, whenever I felt the urge to like take a screenshot and send to Gold Key, like, oh, look how much I'm up, I'll be like, okay, time to break off some. And so like, I was just kind of, as I was, kind of watching it, I was, kind of breaking some of that off. And then Axis messaged me. He's like, buy Axis. And literally I was like, okay. And so like, no analysis, no nothing. I just, just bought the token. That one.
All right, hold on. I want to ask you about Axis token, but you just mentioned your childhood friend and business partner, collaborator, Gold Key, who just dropped a $20 super chat. So hey, thanks so much, Gold Key, for being here and for the super chat and telling me congrats on 3 years of YouTubing. And you guys have been collaborating for many years. How long has that been?
I mean, we were winning football championships together when we were like 8 years old.
Yeah.
And then we started working on startups together in 2016.
Awesome. Shout out to Gold Key. And now, so you invested in Axis Alive coin, which is different than the Axis Alive coin that I bought, that Funding Gym had put out as like a joke and like a learning tool. So I it kind of wasn't on my radar because I thought I had already been there. But the one that you bought, has that been one of your best performers in this challenge?
Yeah.
Okay.
How's
that one doing?
It's kind of funny, honestly. I think the reason why this whole thing is going so well is that I very rarely trade. It's almost like when I'm in the right mood and when like, I don't know it, but let's see. We'll look at the axis. And I sold like 30% of it because I wanted to try out the leverage on Fame, which I'm up. I'm one of the top P&L leaders on Fame now.
Yeah.
But one axis is, oh my God.
What?
It's up another 100%.
Okay. So how much is it up?
159 million pulse.
Wow.
So we're now probably at about 200 million pulse on the challenge. I hadn't even looked until you just told me to look now. And so all we need is one last 5x to reach our goal of
get it done.
And so yeah, I bought it purely just like because this challenge, it's not. I'm trying not to take it too seriously. Like I'm kind of just coming and going, and like Axis he's a good longtime friend, and supporter, and so I'm like, okay, like I'll buy some of that. But the thing that's common across all of this is that each position, it's except for when it was like just getting started and there was just like but now that it's grown larger, it's like each new trade, which I do think is a good principle, is that you never want to risk it all on one trade. Like you always want another swing at bat, because just limiting that's like one way to limit losses and not be there having to like time your sell order that well is just by making the position smaller to start with, at the beginning. And so like never taking too much risk. That's why I'm okay with just like kind of, oh, a Tropa deployer, he minted all my coins. I'll buy some of that random coin, unverified, could be a scam. You didn't know at the time. I don't think it's a scam. But like you're able to kind of lever up that risk, I think, by just like never, like if the goal is to go 1 million to 1,000, that means you're gonna have to take a lot of risk. But like because you're levering up the risk, you kind of have to alleviate some of the risk. And so just like never risking it all, because it would be kind of boring if I lost it all and now like, okay, challenge over. So I always want to just keep the gravy train rolling, always have more at bats, and being okay with like breaking off some of it into pumps in some of these positions, because like, now that's just dry powder for a next, thing. And if it doesn't work, like, okay, you didn't lose the principal, you lost the gains from the prior thing. So just trying to, kind of do some light risk management in that way so I can lever up the risk in other ways. But I did sell some of the Axis the other day when Fame launched, and I just looked at the pulse chart and saw it was in a big dip, and then saw like the shape of like that last kind of wave down. It just kind of just had a nice shape to it. And so I just went 24x long with like, I think 30 million pulse. And now let's take a look at that. That one I know is down from the highs. See what's going on here. Let's go to the trade. Let's see if I'm still on the leaderboard here. Come on. Big money, no whammies. So, I am now number 1 on the leaderboard on fame.io. That's awesome.
Breaking news.
Here, I literally was streaming earlier today about base, and then had a dentist appointment, and so here I am, like not even looking at this stuff.
So where does that put you on the challenge of your own?
Let's see. So let's see, net value.
This is great that they were seeing your reactions live. This is like better than you just like recounting it. Is like way more exciting.
So the price is like 0.0045 divided by, let's see. So that's at about what would that be? I think something like 90 million pulse on that position. So in total, what that takes it to like 250 million. So one more 4x on the whole bag. I also hold in that account HEX orange address. And before I move on to that 24x leverage long on PLS from, I think the entry price was like 4.1, now it's 4.5. That one, my plan is to hold that until it hits sacrifice price, so like another like 2.5x, or get liquidated. And the way that the interest payment on the margin loan works out, my collateral will deplete as that interest, which comes out to like 70% annualized interest on the loan. That's going to creep up, and it kind of has a trailing stop loss through the liquidation level that will slowly approach my thing, and whatever the gains are, that's just going to be my gains. I'm probably not doing this the right way. Usually you don't want to be holding a very high rate, like a very high funding rate position like this. But I mean, if I'm leaving money on the table, fuck it. Like, who cares?
Well,
we're riding it.
According to your friend Sami, KDP just made a challenge that she's going to post a risque picture if Pulse reaches sacrifice price by the end of this year.
I mean, I hope she doesn't. She's a nice girl.
Yeah. Like
that should be reserved for someone that is great to her.
I hope she's joking about it and does something else other than that. But yeah, it's
her choice, but totally her choice.
It's
it's
amusing
that her choice to do whatever she wants.
Everybody is laser focused on getting back to sac rate. That's a good sign, in my opinion. You in the past 2 months, when Pulse holders were down 60%, and many of us are holding lots of Pulse anyway, but you took $100 and turned it into $11,300. You're within a 4x of this amazing 1,000x goal. You've gone up 250x, and it sounds like the common thread is that as a developer and fan of the HEX and PulseChain space, you have simply been identifying people that you know are good people, or maybe you don't know, but you have a feeling based on what they've built. And I think that's part of how cool the story is, not just that you have the gains, but that the gains are attributed to you seeing people providing real value in the space.
Yeah, and I mean, it's also kind of like if something just, like reaches me at the right time and just kind of gives me the right thought or gives me the right feeling, it's like I'm down. Like I try not to like, put myself in a box ever, and like just have fun. Like, and it's like with the other thing that I have in there, the Hex Orange address. Like I've literally, like, if you look at my, just search Tanto Nomonai Orange, like I literally, part of my, like, a core piece of my diet, and I, like, for my whole life pretty much, like I eat so many oranges, and I'm so like in love with citrus as a fruit category, and I just love all varieties of citrus. Like I want to go on like an international citrus tour. Like I have some like, I like have this concept for a book called The Art of the Peel, which is like artistic photography around different ways that I peel oranges. Like I'm very into citrus as a food product, and literally like they're like just people that I interact with, just goofing off about oranges. Like I was like, okay, I fully align with oranges, and so I will buy this thing. That one I think has gone up a little bit, but like I'm very proud of that, and considering it, like just being able to carve off gains and just have fun with it. I fully support citrus, and so Grove Gang.
Yeah, well, I can see that doing well too, because everybody's so excited about the meme. Yeah, and I tend to join their Twitter Spaces because that's such a fun group of people. And yeah, we were in a space the other day with Tangent and all the different Tang gang members. It was a good time. Awesome. Yeah. So you've been doing this trading challenge. I wanted to ask you as well about the censorship that's going on with Hex. Do you think that, like, how do you see that playing out in the future? What I observed was that, particularly for eHex, there that and the way that I framed this, though, I think was a little bit sarcastic, but also true to form, is like, I was thinking to myself, thank God that the government and Hex are both doing what they're doing, because otherwise it wouldn't be super clear what true DeFi is and what's been compromised. And without, the what I assume is the government putting pressure on front ends, in particular, of swap websites like Uniswap, Matcha.xyz, MetaMask. These are all places where you used to be able to swap Hex when Hex was 30 cents. But now that it's 100x lower, now that it's 0.3 cents, a third of a penny, they all of a sudden they don't support the asset. And this is evidence to me of a corrupt SEC that it is been tarnishing the name of the founder of Hex. But the founder of Hex has nothing to do with Hex on the blockchain, and so they're harming the people who still believe and who believed all along. And it's like, if I wanted the government to tell me how to spend my money, I would sign up for a CBDC. I wouldn't be using my freedom of speech to trade cryptocurrency. And like, if I lose my own money buying Hex at 30 cents, like, and then the government stops people from being able to buy it at a third of a cent, now they've just harmed me more than they helped me, right? And it's like, it's so backwards. And so I think, particularly Richard Hart being a founder who I think you may be able to comment, you've checked the chain analysis, and he's one of the only crypto founders ever who hasn't sold a single token ever. And it's transparent because Hex trades on the blockchain versus Coinbase, and having all of its cryptos trading without the ability to do chain analysis. And so that's kind of the state of what I'm seeing, is like, people are calling MetaMask and Uniswap and Matcha.xyz crypto, but they've diverged from the core values of being censorship resistant, being transparent. We don't know why they've censored Hex. We have to guess. And so they're not being transparent. They're being middlemen, gatekeepers, instead of being true to decentralized finance. What's your take on all this?
Yeah, I mean, I think it kind of shows where, like, even though the technology operates in like a decentralized way, there still are centralized points of control. And especially like with these decentralized exchanges that are also like big VC backed companies like Uniswap. I'm sure, there's like a whole like enterprise centered around, CowSwap and 1inch and Matcha. Like those people, at the end of the day, those are people at their day job. And sometimes people at their day job make decisions based on incomplete or biased information. Mm-hmm. And what it probably comes down to is like someone that they employ as like a compliance officer who doesn't have like the specific nuance and context that we all do about how everything operates. It's like they see the headlines, they see kind of like that like initial wave of information, and out of the abundance of caution, probably just like make the call to add Hex to the list of the hundreds of other things that are blocked on from the Uniswap front end. When you look at the list of things that are in that block list, a lot of coins that are wrapped public stock. So any coin that's like tries to be like wrapped Microsoft, wrapped Tesla, so things that are like actual security, like that is the sale of a security, because it's like a wrap.
I didn't
like
know that. Okay, cool. That's a good example.
Exposure or related to it. They block those. They block scams too. But it's kind of like at their, like, it's their website, their discretion. And so that's just them applying their own discretion based on their own circumstance. Like their circumstance is very different than our circumstance, because like, you know, they're not only trying to be a good product to cater to customers, they're also trying to position themselves like amongst like a larger ecosystem of like government, law enforcement, regulation. And so their situation and their perspective is just different from ours. And so like, I don't necessarily view some of those things as like direct, like hexagon targeting. I think that like the situation that we're in kind of puts us in this, if they're casting a wide net to try to cover 98% of things that could cause them some like open and close issue, I think, you know, they're going to lean on the end of blocking that. So I don't really view it as like targeted, you know, hatred. Well, maybe that like help, maybe some of the people that are involved in those decisions maybe have a negative bias around Hex from, you know, maybe they like are like most of the people in crypto, where the first thing they ever heard about Hex or Richard was 2017 when somebody was upset about how Richard talked to Roger Ver on a YouTube stream, and then went to go Reddit, and every single thread they're post replying, Richard Schuler, known scammer, FBI most wanted, robbing people in Panama. And then you click the link, it's an article about him getting robbed in Panama. And like, so there's this bad SEO. And I think that formed a lot of the like crypto people's opinion in 2017, 2018, 2019, when Hex was launching. And at that time, there's very low appetite for new coins. A lot of people were funneling back into like Bitcoin only or ETH only. So like the timing of when Hex launched combined with just bad SEO because someone was just spamming bullshit on Reddit.
You know, and if like you're one of those people listening right now, bias. Roger Ver made a 1-minute video for the Hex conference saying we did a good job of being DeFi. So change your opinion now. Update your worldview.
I agree. I think Roger Ver is a good actor. Yeah, but like, you know, that's where all the anti-Richard stuff stemmed from, was like during the big block versus small block debate. Like, and so it's, you know, so the things like that may have influenced it, but you know, it kind of, that's just kind of par for the course. And the way I try to look at that is that like, well, it can cause short-term, you know, harm, or maybe that limits people that would otherwise logged on to Uniswap and bought Hex, even though now I think you can buy it unless it's my VPN. Like I do believe that it's at least not fully blocked. It may be flagged, but I don't think it's actually fully blocked anymore. But it may be location based.
It's a mess right now for sure.
Yeah.
And if you're looking for a way to buy or sell Hex, I use cow.fi. These days is a great coincidence of wants aggregator.
Yeah, and the aggregators route through it, so it's like it's not fully blocked. It's more like,
but
you know,
but I went to 3 websites I've previously traded Hex and was unable to do it on Ethereum.
Really?
So
well, yeah, and also the Hex contract was blacklisted years ago. This is not new, but 2 years ago, the Hex contract was blacklisted from USDT, which has no effect because Hex, the contract itself, like it can never be the sender of USDC or USDT rather. And so, and on the same day, other coins, like legit coins like YFI, were blocked, and like there's literally thousands of addresses. So that, again, there may be some broad net that whatever software they use to identify high risk addresses. So like, who knows, like why we, you know, but I think that if this is causing there to be some mispricing of the risk, like price being low and like gates being shut because of some perceived risk that isn't as risky as is perceived, then at some point that gets priced in. And like, that's what you will really try to look at in like investing in assets, are things where the market is pricing in a greater risk profile than what actually exists. And if there's a clear path to like something being perceived as high risk today, and then the price being low because of it, to then where that risk is now alleviated, then that can cause, you know, like instant pricing in of like the new risk profile. And so like, maybe that's like a sense, like I try to look at it as like a time of opportunity in this, where like, you know, maybe the real risk will get priced in, and maybe that's at a higher price.
Well, I said earlier in the show that I was going to explain a trade I made recently where I made it all back in one trade. And that's the case of how I'm looking at my HEX staking ladder, this rolling ladder where I like the idea of rebuying my TShares. And but I find that it's hard sometimes when the market's particularly down, not super down, but just down a little bit, that I'm like, oh, because I'm I'm trying to do productive things and survive off of crypto so that I can build my products and not have to go back to a job that didn't scale. I want to scale mental health through programmable money, and the things I'm building and the work I'm doing is really trying to help more than just one clinic's worth of people who can benefit from mental health therapy. So I'm like, I at first didn't understand how valuable desi was, and the Maximus contracts that you had created, and had some I had concerns about being able to have tradable stakes, particularly with Hedron, with them airdropping a token that then took a lot of value, and people have seen me update my worldview over time, and come to particularly appreciate the contracts that you've created. But I was listening to your broadcast the other day, and you were explaining like how cheap desi was on both chains, and you're saying that there's like a 20 to 30% discount versus the price of hex. And so I go and I'm looking on chain, because I had bought some desi back when I didn't know we would go this low, and then I ended up like swapping it back to hex, I think at a loss in terms of like the hex value. I think I had lost maybe like 10% of the value of my hex, because it was either trading at a premium, or maybe it had been at a discount and then was at less of a discount or something. But definitely seeing that massive opportunity there with the desi contract, and then being able to plug it into gopulse.com, my portfolio tracker, to be able to see how many TShares it represents easily. And so I kind of jokingly say, but I guess it's true, that I made back all the losses I had made in desi in one trade, because I recently stocked up. And the way that I was looking at it is that the market is even discounting the net asset value, which is much higher than a 1-to-1 desi to hex. Is that correct?
Yeah. So a good site to look at it is someone in the community made lookintomaxi.com. And on there, it has some really useful charts for seeing the price relative to either the mint rate, which is how some people approach the discount, or the backing value, so the to-date stake earnings. And so just right now, looking at it, eDesi is at about a 12 so eDesi, the price is about 0.88, but each eDesi is backed by 1.3.
Wow.
Yeah. And so the and it has a full breakdown of the percent discounts from the underlying value or the mint value. And so which I think is particularly interesting, because it allows for you to make an equivalent stake calculator. Because like right now, the desi stake ends in 9 years. And so with a single hex going into desi at a discount, it's as if you're buying, like 1.3 hex principal that is staked for 9 years. And so there's a like an effective APY that you can get, which let me share this. These numbers may not be updated now, but let me share this in the chat, so you can reference it. I'll share it in the private chat here. So like if you're buying desi at 0.84 hex per desi with 3,289 days remaining, you're experiencing a 42.54% APY compared to the 30% APY that a normal 9-year stake would earn. And that's because you're not only buying at a discount to the underlying hex, you're buying at a discount to the amount earned to date, and you're staked for 9 years, but you got the 10-year long share rate. So you got that last 20% extra bonus TShares, and you realize it in 9 years instead of 10, and you're locked in at the share rate as of a year ago, which is now 20% higher. So like the combination of like getting last year's share rate plus the underlying coins at a discount plus the 2 date earnings plus ending the stake in 9 years instead of 10, like all those things combined to giving the buyer at a discount of these tokens much elevated APYs. And so that's kind of like what I think is like some real magic in there, is that there's like, if there's a discount, there's not always a discount. Sometimes there's a premium. But if there is a discount, that's like an attractive way to bring in liquidity, is because like discounts, the longer it goes into the stake, those discounts are like just extra. Like imagine getting, 2 years of yield in 1 year type of situation. Like that's like a nice multiplier on your APY. So I think there's like a nice equilibrium with those discounts.
It's an incredible deal. And for me, I was holding some liquid hex, and it just made sense for me because I was down so much on the hex. Why wouldn't I want to be earning yield? And then the dollar value is so low that I'm not going to push the price against myself because of the low liquidity in desi. Too bad. At least at this point, I was pushing, maybe doing like a $500 or $1,000 buy at a time. I was pushing the price against myself, maybe 5%. And so that I'm still getting this huge discount. I'm getting more desi than the hex I'm giving up. And so I'm getting a 30% bonus there. Then I'm getting the 30% bonus of how much hex has been accrued. And then I'm accruing more hex, or I'm accruing at least more net asset value every day. Now the liquidity could dry up more than it is now. And then I would just have more incentive to hold long term. So it's for the right position size. If you're a small enough holder of liquid hex, it made sense for me to. And then another thing is to demonstrate the power of crypto. I took some desi and I time locked it. I did one for 30 years and I did one for 55 years. That I put them on these physical coins, and it's like a 1 ounce coin that has a
like
nice. But it has a private key built into the back of it, like laser etched, fire resistant, flood and scratch resistant, and everything. And so it's an actual transferable hex stake that guarantees that you're going to have your TShares, because with Time Pays Me, there's no early end stake with and so it's like, so I gave one of these to the crypto professor Lamont Black as well, so that he has a 30-year hex stake. And I've been having a lot of fun combining our two different technologies, which brings me to my next question of would there ever be could you ever see the possibility of a max length perpetual tokenized hex stake?
Yeah, for sure. Like when I look back on it, I wish I just made the original Maxi repeating. It was easier than I thought it would. And that was my first contract. So I was like ruthlessly trying to like cut scope, trying to just, reduce it down to just make it as simple as possible. So just like a one and done thing was just like the plan. But then looking back on how easy it was to convert that original Maxi contract into a repeating stake, I wish I would just done it from the start. We're building kind of like the groundwork for almost like a proliferation of these kind of like branded stake pools. And so very, very soon there will be, options for that 15-year repeating hex stake. So we haven't done it yet, but there's definitely going to be.
The biggest disadvantage, in my opinion, or kind of maybe it ends up being a net positive for the system as a whole, is the low liquidity situation, to where when there's a little bit of a discount or a little bit of a premium, it's not so much of a problem. But I guess there's lots of complicated pieces to it. But to my understanding, what you're building is a way for with Pool Party for people to create their own tokenized hex stake pools that will benefit from maybe a little bit of bigger pays better, but mostly just decreased gas costs at the end of the stake, increased basically optionality when it comes to selling early, even if it's at a discount. It might not be as much of a discount as early end staking would be, and allows somebody else to continue the stake that you are wanting to get out of. How will you deal with the issue of like small groups of people creating small pools, not getting the benefit of having greater liquidity?
So it's kind of the way I see it playing out is that probably most of it is going to consolidate into a handful of medium to large size pools. And there's going to be kind of one-off pools, but joining a one-off pool or organizing one, it's like you kind of understand that risk that you just described there, that like, liquidity may be low for your particular pool. I do have some kind of like some concepts that I've prototyped and trying to decide if it's going to make it in like the original release. But just seeing how the liquidity has played out with the existing pools, there are a couple actually really good solutions. One is related to making it where there's baked in liquidity to the coins themselves. And so like when, for example, you would, and it's mainly on the sell side liquidity, but it would convert into buy side. Like imagine with the hex stake, like with desi, for instance, like imagine if an additional, say 5% of the desi supply after the minting at 1-to-1 rate was now just minted by the contract and then locked in a V3 liquidity pool from the mint rate, scaling all the way up to the expected end stake rate. And so now there's like that liquidity on the sell side baked in. And then as people come in, as they buy, now it turns into buy side liquidity. And so like every buy order would stay, from that like kind of pre-generated liquidity position would then convert into that. And then, so the users would experience, because that inflation on the supply to be in a liquidity pool, that, in effect, it can lower the effective APY of that stake, but perhaps that may be worth it to boost the liquidity value proposition to improve the slippage that all users experience participating with it, and to just kind of bake in some supply. And if you really are worried about that delta of like, opportunity costs versus not baking in that liquidity, then like, maybe you as a user should just keep some hex on the sidelines equal to that amount that you would have given up, and then try to buy in at a discount to cancel out any of that, like that nominal inflation for the sake of the liquidity pool. So like solutions like that, I've actually scoped out and written contracts for, to, kind of that. And that's more on the sell side, because a lot of times like the main complaint is people complaining about not being able to buy any. So they just don't, because like the slippage is really high. So that's more of a solution on on the sell on like, or I guess that would be for new buyers. But for people that are participating in those coins, kind of the other end of that solution is more related to kind of like consolidating those into kind of like a core pool. So I think the fiat.io is an example of that with the perpetuals, where they're like all in a liquidity pool together. So like those types of solutions like totally work on one hand, but another thing would be kind of more like almost like something that's like you know how like on ICOSA you can burn your HSI and then mint ICOSA at a fixed rate relative to the TShares. Kind of a similar concept of like any of these stake pools that are minted through the pool party platform, you could deposit those TShares into like a broad index contract and then mint this other coin, and then that other coin being backed by all the TShares in the pools, then being where the liquidity can concentrate. So almost like it's like we're allowing for more pool creation, but then like I think it just makes sense for there to kind of be something where, you know, like you and your friends make a branded, 5-year stake, and then someone else and their friends make a totally different branded one, but you can both, because those are backed by X many TShares, you can mint however much of this other coin, which is now backed by the basket of all the stake pool tokens that went into it. So kind of like almost like undoing that kind of like proliferation of pools, kind of providing options for consolidation of them. So things like that are the solutions that I think of, because like there's like really nothing stopping anyone from doing the stake pooling. It's kind of like genie out of the bottle. You can't really control the like supply of these things. Like new pools can always be made. And so rather than trying to like kind of like almost like, like there's like NIMBYs and YIMBYs. So like some cities have a big NIMBY problem where like people don't want new development because it impacts the value of the assets that they hold, like not in my backyard, type of thing. It's kind of like that, where I don't want to be a NIMBY in the situation, because like, more people participating in pools in general is better, because the main goal of all this was to keep more money in the HEX ecosystem that's not extracted out through gas fees. Like that's the core purpose. The liquidity I would consider as a secondary purpose. And so like, to me, it's like, rather than trying to like, if there is going to be competition for liquidity from potentially other sources, like at least we should be the ones competing with ourselves to kind of capture that. And then like, if that's now the new reality, where there's now a bunch of these staked pool tokens and perhaps liquidity spread out amongst them, maybe that's a good thing, because like new buyers coming in, getting good discounts, that's like another core value proposition. So like, I'm not even necessarily like concerned with low prices on these tokens. Like low prices are good in my opinion, because, it kind of balances out that opportunity. But like having solutions to be able to consolidate, where like liquidity can kind of be centralized again. And, maybe there's, some trade-off you have to take to be able to exercise that liquidity, but like, at least it's there. So that's kind of how I'm viewing kind of what comes next. Like if there's now suddenly a bunch of these pool tokens instead of right now there's 5.
Well, I'm gonna probably catch the replay of that segment you just gave, because I think it was so rich with good ideas, and in particular, the one that I can kind of wrap my head around already is the first point that you made about a potential solution to the liquidity problem being this scaled thing. That just seems like, man, like what are you going for a Nobel Prize down the line or something, trying to solve all the problems with Uniswap? That's pretty cool.
Maybe, I don't know. Like, it's like it's more like kind of trying to just see what the immediate, like what can deliver immediate results, I guess. And just seeing how things have played out, like with with the existing perpetuals, there was truly zero effort to like actually really try to get people to supply liquidity for them to be purchased, because they're actually kind of it's not necessarily the easiest thing to like actually want to do, because like why would you provide liquidity at like a 1-to-1 rate if you know that in, like for desi, for instance, even though with desi it being at a discount, like, that kind of isn't quite maybe the best example, but for base, for instance, like, the base is going to be redeemable for about 12% more in a year. Why would you make your coins available for sale at the current price? And so like that's kind of like a hard mountain to climb, is just getting people to want, for like, it's like the fees would really that would mean price would need to trade back and forth in that range many times over for it to be worth it from your perspective. So it's already kind of a hard thing to provide liquidity for. And I guess the only thing contract level that was introduced, it actually reduced saleable liquidity through the diamond hand system. Like the only efforts that I directly made on this actually reduced the liquidity. So that's kind of been the only approach so far.
Another thing that came up for me when I was trying to conceptualize all this is like there must be some trade-off between providing a liquidity pool yourself between a perpetual and HEX. So the opportunity potential there versus the underlying value of how much the HEX is accruing, because you would imagine you'd be wanting to value based in HEX terms. And so if there wasn't enough volume happening to make up the trading fees on that pair, then it would almost be kind of like a losing value proposition to provide liquidity, because it would basically because the desi is going to be more valuable over time in terms of its net asset value, and because the liquidity pool is being priced in HEX anyway, you would imagine that the incentive to provide liquidity that would have to be balanced somehow. Does that make sense what I'm saying?
Yeah, and you can calculate exactly that opportunity cost, because like just for example, say you minted, so base just ended, it earned about 12%, so over a year. So say you minted your base and then you decided to put all of your base into the liquidity pool, scaled from 1-to-1 to 1.12 to 1. So just like you predicted that it would earn about 12%, you were going to provide liquidity that whole range. And so, and then because when the stake ends, it's now mintable and redeemable at the new rate, the price in the liquidity pool just yoinks up to whatever that redemption rate is, because there's dual-sided arbitrage that keeps it there. So like you can be highly certain that between the start day and the end day, price is just going to, like it's going to move through your position up to that end redemption value. And so now that prices move through your entire liquidity position, all of your base is now in the pool converted into HEX, that is now effectively a buy order through that whole position. So now your average price of the average price comes out to, like, you would get 1.06 HEX per HEX you started with minting. So it in effect would, like, if you were to provide liquidity equally across the whole range, your like average sell order comes out to be that halfway point. So you experienced 6% yield on the year while base holders experienced 12. You also earned from the fees the whole time. So the fees would have to be 6% over the year or greater for it to be worth it from your perspective. So like that's if you take that as a baseline, liquidity position is just like spanning the whole range. The fees need to be equal to half the distance between the mint rate and the next redemption rate for it to have been worth it for you.
I'm really impressed with the deep level of thought and understanding you're putting in there. And yeah, so
I'm only
wow.
familiar with this because I like in modeling for that like new like potential liquidity solution. That's like the exact math behind how that works. Where like you give up some inflation, and then where those coins effectively earn at a lower rate, because then those coins would just be distributed amongst the end stakers. And so like I've fully modeled the math out, and so that's why I was able to recite it right now, because
that's so cool.
That's something I'm actively working on right now.
Well, I'm extremely grateful for you coming on the show and answering all these questions, sharing your expertise, and you're, one of the premier builders in the HEX space here. Certainly having made so many great products and things that have been super valuable to people. So we're very lucky to have you in the community. And there's plenty of other things I could ask you now, but I know we're about out of time. So yeah, I just want to say thank you so much for what you're building. Thank you for coming on. Where can people find more? What are some things you've got going on that you want to let people know about?
Yeah, so definitely main channel is Twitter. So find me there. Also t.me/Maximus DAO. Don't fall for scammers in the chats. I will never DM you. Don't DM me unless I really know you. But so that's where you can kind of follow along. Right now, what's currently going on is the base stake reload phase. So the first perpetual just ended as the day ticked over into the second UTC. And so you have until the day ticks over from October 9th to October 10th UTC to be able to mint new base to join a 1-year HEX stake pool. So we have that going on. And then
congratulations on that.
Thank you. Yeah. Thanks. Yeah, everything went smooth. It was awesome. And someone else who's building kind of like another type of gas saving solution for HEX staking actually ended the stake as part of his protocol. So there were 6 stakes that tagged along to the base stake ending in the same block, which is actually really awesome innovation related to all this stuff, which is entirely different discussion around that. But so yeah, the base stake ended, and that's also marks the team token, which earns a little bit of yield from all the stake pools, base, true, lucky, desi. That stake cycle it's on the same base calendar, so that's open as well for you to stake team for the next staking period. And very soon we're going to kind of launch the next generation of the HEX stake pooling protocol, which is Pool Party.
Cool.
So new types of HEX stake pools, new dynamics with revenue distribution with the party token, all kinds of cool stuff. It's all been culminating into this. But mainly just having fun online. We're kind of all in this together, and so just follow along. There's always something new happening. Always getting into some trouble. So come join me.
Awesome. Yeah. Well, I dropped your Twitter here in the live chat and on the description below. I'll be streaming with the gang later tonight, but I really appreciate everybody tuning in, hitting the like and subscribe button. You can find Dipcatcher on his YouTube channel as well. He streams regularly and has really brilliant things to say. So I can't wait till the next time we get to catch up, but thanks for being on. And until next time, everybody, stake wisely and peace out.
Thank you.
Yeah.